The strong dollar this year is a real problem for EM, and it's useful to think of it as the exact opposite of last year, where all throughout last year we had the DXY weakening throughout the year, which enabled EM markets, Asian markets, to focus more on the underlying earnings story, and we had a great year last year. This year it's the complete opposite in terms of the dollar.
So where do you go? Where are you looking to invest, given the various risks out there that we just ran through with Martin?
Yeah, I mean, so first of all, for us, from a global equities point of view, we're underweight global equities, but we do have a positive, long-term positive view on both Japan and global EM. So global EM obviously not working out right now, and part of the story is that stronger dollar. But we're, in the long term, we're looking at mispricing between earnings and the market, and we think that we're getting more and more of a mispricing, certainly in Asia EM currently. So if the headwinds that are currently more influencing the market than the earnings story is, if those lift, then we could be looking at a decent opportunity.
It seems to me that they're two really different headwinds, if you will. At one time you have global liquidity concerns, largely pegged to the Fed, but other central banks as well. But then the trade tensions. I mean, what we're seeing today is that the market is still very sensitive to the trade tensions and perhaps any relief in the tensions between the U.S. and China. I mean, do you think that if we do get an agreement coming between Beijing and Washington in this next meeting, that you would see a real uptick to markets globally?
Certainly the trade tension issue is completely dominating markets at the moment. So we sort of have a three-scenario approach to the market, and we think the market's starting to price in sort of the worst, not the worst, the worst case scenario. So certainly any lifting from that sort of environment would be positive. I think, however, given it's going to have to be a big meeting between Xi and Trump that really puts a line under anything. But certainly as a signpost along the way, it's good to have a discussion. And
what you say about earnings, in the sense that the recent earnings season was quite positive, but talking about these trade tensions, talking about the sentiment-driven headwinds, if you will, do you think the next earnings season will start to see that reflected in real numbers?
But certainly. I mean, there's been discussion of tariffs for, let's say, most of this year, but actual tariffs has really a new story. So we'll start to see that. I guess, contra to that, a lot of corporates in Asia, China as well, is more of a domestic demand story these days, or a regional demand story these days. So earnings are not as sensitive to, let's say, exports than they were, let's say, in the last cycle.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.